Recording in progress.
Tony?
Hi, Peter.
Yeah, well, all right, so we'll start the meeting. Oh, finally it is. 6:03. And Al for Tony, Ben is present, Al and I, Ben, Al for Tony may be able to join us within 30 to 40 minutes, although this may be a short meeting.
Yeah, I think we're not expecting Al. He just emailed and said he's going to be late to council.
Oh, okay, because he also, okay, sent a separate email. Okay, whatever. Hopefully he'll be able to join us soon. Do we have anyone for public comment?
I don't have any indication that we do. I would defer to Tasha and Ryan for that in the event something came to the town manager's office.
Okay,
Nothing came through town manager's office.
okay. Then we have the staff report, which, go ahead.
I'm sorry, what time did we start this meeting? Just want to make sure I get my minutes
Oh,
right.
6:03.
Thank you. So the only staff report is that from me for the audit update. So the original objective was to extend the audit through January 31st. And unfortunately, due to a number of illnesses with our auditors, that became unachievable. So on the 31st of January, we meaning myself and CLA, submitted a request for an extension through February 28th. And as such, we are in full court press to get things completed by the 28th. We had an update from the auditors on Friday for all the items that we're now pressing forward to get completed. And so we're just sort of cranking through. In addition to the auditors of record, there are several audits that are in play regarding the federal funds, the Corona Relief Fund, on the boards of ed side, the ESSER, CRF funds, and so on and so forth. So originally I was quite distressed over this extension. However, I've heard and spoken to other of my counterparts in other municipalities. This is not just happening in Mansfield. So the federal funds and the level of reporting and the requirements associated with the reporting is a heavy lift. The State Department, the Office of Policy Management, OPM, has, as of Friday afternoon, extended the deadline for the CRF audit. They hired an external audit firm to audit the records of all the municipalities in the state. And what the audit firm was asking for was substantially more than what OPM had even requested of the respective municipalities when we submitted our evidence of how we used the funds that were granted to us before we, without us asking for them. If you recall, the CRF funds were just allocated to the respective municipalities, and we had to demonstrate how we could use that money and provide the evidence of how we used the money in the way in which they asked for it back in 2020. Well, fast forward to January 2022, the outside audit firm has asked for significantly more data, which requires us to do more mining, right down to, I'll give you an example. Most of us get paid either weekly or biweekly. So any municipality who use CRF funds to support, let's say, the fire department for back in July of 2020, for the fire department, the coverage for overtime when the respective fighters were falling ill or had to quarantine as a result of coming into contact with someone during their regular duties, to quarantine after being in contact with someone who was known to have COVID. Well, when what was originally asked for, we provided. What is being asked of us now is to provide literally the pay advices from July 1st, 2020 through December 31st, 2021, demonstrating how those monies were used to pay those firemen and firewomen. So that's a far cry from what was originally instructed to us. So they in turn had to, apparently there's a number of my peers who have a degree of pull, like in Hartford and Danbury, to push the needle a little bit. And therefore OPM has extended its deadline. The deadline was tomorrow at 5 o'clock. It's been extended to, I think, the 27th. So we're busy in finance with audits.
What, and do you, I mean, I know it's hard to say, but you anticipate any problems by getting it done by the 27th?
Well, now their declaration, OPM's declaration is it's a firm deadline, the 27th. CLA and the Shared Finance Department have to meet our February 28th deadline. We just have to. So staff is pulling in the hours that they need to in order to get the items that are on our checklist off and completed.
Okay, and there's no penalties either from the federal government, I mean, or OPM. Well, obviously not OPM, they extended it. So we're not having, there's no financial penalties at all associated with this.
Right, so as I understand it, OPM has, just like every other state in the country, has to provide an audit to the US Treasury that declares how they made sure that the respective municipalities were spending the money accordingly. And, you know, with the rampant fraud that has gone on throughout the year and a half or so, they've advised the respective states to get an external audit firm to do their respective audits. So that's where we are. So they have to then roll that up to the US Treasury, and usually they give themselves, the state gives itself ample time to do the roll up, but it kind of compresses on our side, on the municipality side, the amount of time that we get to submit our data. So the 27th is a firm date, and that's what we're working on from an audit standpoint.
Okay, great, thank you. Tony, Ben, any questions, or Tony? Okay, all right, then we have the approval for minutes. Oh, December 13th? We've had
Yeah.
one, okay, all right. Oh, that's right, because we couldn't, we didn't have a quorum.
I'm sorry, January, the minutes are from January, the quarterly financials are from December.
Yeah, okay, right, oh, good, January 19th. I don't know, Ben? Let's see, let's wait like 20 seconds and we can move that to after the second and final, the old business, the new business, the financial statements.
Okay.
Okay, I don't, Ben, you back? All right, let's, well, I'd like Ben to hear that too. So why don't we wait 1 minute and see what happens? So Ben will be right back, and then we can go through that.
What happened to Ben?
I have him, I see him on the screen, just the video is, and audio is mute. I don't know if he lost connection. Let's see. I don't have any messages from him.
Yeah, he didn't put anything in the chat that said he was.
Yeah.
stepped away.
Maybe something just came up real quick. All right, well, why don't we go to, because I have a question just right up front, a small question on the new business financial statements as of December 31st, 2021. Is that okay, Charmaine?
Mhm.
So my question, oh, go ahead. Oh,
No, I'm following along. Yeah.
Mike, just on one of the things, facility management decrease of 24,310, general wage increase offset by reduction of 0.5 FTE. And is that my question is simply, is that a permanent reduction?
I'm sorry, can you tell me what page you're looking at?
Oh, this is the summary page, second page of the memo.
Oh, okay.
And it's simply, my only question on that is the facilities management notes a reduction of 0.5 FTE custodial. Is that a permanent, do you know, is that a permanent reduction or temporary? Sounds permanent the way we're talking about it, but
I don't know that that's a permanent, I mean, Ryan, aren't there
Yeah.
there's some movement happening with staff?
Yeah, I guess, Peter, I don't read that as permanent. We've had some turnover with folks, and facilities is not in the process right now of trimming staff. If anything, there is some pending requests to increase staffing starting next budget year.
so it's a position that hasn't been filled, hasn't.
Right, there's basically been some savings because it's been vacant, but not
Okay.
eliminated.
Okay, we may want to just change the wording on that, but let's quickly go back to the minutes of January 19th.
Sorry, I had to step away for a second. I moved to approve the minutes. Peter, are you in a second?
I am, yes, I was just making sure I had the right thing. Yes, I second, and Al's not here, so they are approved. So we'll now go to old business. And I just had one question, which Charmaine and Ryan answered. Charmaine, do you want to go over the salary budget transfers?
Okay, so we're doing the quarterly financials. We're not doing,
Oh, I'm sorry, I was reading from the minutes. Yes, the quarterly financials. Sorry about that. Oh, I see with it, yeah.
okay. So that must be what the reference was to the facilities management.
Yeah, I apologize. For some reason yes, that's correct.
That kind of threw me for a loop because I was looking for what page in the quarterlies were that, but now it makes sense.
Yeah, I can see that. Yeah, I was looking for the summary. You're right. So I'm glad we got that clarified. So why don't we go to the financial statements?
Okay, so the December 31st, 2021 quarterly financial statements are presented as follows. So I'll go through the revenues, and since we have a little bit more time this particular meeting versus in the past, we can do a little bit more intimate deep dive if you're interested. But I think we're looking great. I mean, this is one of the highlights I have of the year thus far, with all of the respective reporting that needs to get done for the state and the U.S. Treasury. The tax collections are going well. Again, this is a welcomed report. So as of the end of December, we were at approximately 66% of collection compared to last year, which was 65%. Again, either year, the citizens of Mansfield pay their taxes, and they pay them in a timely fashion. So we are in good standing. The licenses and permits, so conveyance taxes. Now, this is always a tricky one. So the taxes received thus far as of December 31st are $158,000, which is in essence 131% of the annual budget. So this is one of those needles that you can never really pinpoint, because unless you know what's being sold well in advance. So again, this is good to have this revenue in, but I don't know that it's alarming that it's way above budget. It may continue to increase, as the year passes on. The building and housing permits are pretty much on par, 50%. Based off of my understanding, a lot of that happens in the first quarter anyhow, and then in the fourth quarter. So the third and fourth quarter. So we're still in a good standing with there. State support for education.
Charmaine, if I could just, I'm not, so when we say, for example, conveyance taxes are 157 or 131% of the annual budget, you mean ahead as of this? Could you explain that, just what that means? As of
that means that we
third quarter?
budgeted for substantially less in conveyance taxes received and for the year. And so we've already surpassed what we budgeted for the year.
Could that just be because we've had a hotter real estate market than we've had in the past? So we're budgeting based on past experience, but there were more transactions for more money last year than there were in the previous years. I mean, this is the tax we get when there's a real estate
Yeah.
transaction.
That's accurate. I would say it's a function of increased volume of sales and increased sale prices.
Okay, cool. Great
And-
news.
Yes, and when we say 131%, is that total or is that projected, or, first half of the fiscal year? Or is that 131%
For the whole year.
budget? Whole year?
Yeah, we're already
Got it.
31% over where we thought we would be at year end, and we're only 7 months or 6 months into the year.
So when we're at 58% of the annual budget, we're about right where we projected roughly.
I don't
The
think I
next-
understand.
building permits are 87,000 or 58.
Right.
Yeah, so that's about where we should be, given where we are in the fiscal year, correct?
Correct.
For those other two sources,
Yeah.
correct.
Okay, thank you. You were gonna go on to state support for education.
Right. So the ECS is coming in as expected. There's no, we've received our $2.4 million, which is about 25% of the budget in that first quarter. So you've already seen these numbers. The next deposit wasn't due until January, and then the final 50% is due in April. So again, this is the same as what it was in the previous quarterly financial statements, because that's, we're on par for the schedule that the state has for the deposits for the ECS. Okay. The state support for general government. So now, here's the fun stuff. So those pilots. So the pilot grant, long and the short of it is, you all recall that we kind of postponed and pushed back as far as possible the finalizing the town of Mansfield's budget until the governor's budget was approved. We still finalized our budget before the biennial budget was approved. And therefore we only budgeted about $800-ish plus $1,000 from the promise of that extra pilot fund, and they actually came through. So we received the pilot money in the first quarter. So again, you saw this in the first quarter quarterly financial statements, and that is why you see such a large dollar amount there for over the budget, because we received more than what we had budgeted for. Any questions there? So for the most part, the charges for services, fines, and forfeitures, those are all on par. The interest income, again, the interest rates are pretty much the same year over year for the quarter in question. 0.10% is what we're working with. So we, off of the monies that we have in our respective STIF accounts, we're looking at about $15,000 that has come in for the as of December 31st. Okay.
And this is what, so fines and forfeit, which category again?
Miscellaneous. This is the interest income.
Right.
And the telecommunications service payment. So it's not a ton of money, but it's still more than what we got last year at the same time. Okay. And then if we move on to the expenditures and we look at the Daycare Fund. So Mansfield Discovery Depot, actually their quarterlies are included in Ryan's quarterly financial statements. The Daycare Fund ended with its revenues exceeding expenditures by $118,000. So their fund balance has significantly grown, and you'll see that in the details further in the quarterly financials over the past year. A lot of that is driven by these PPP loans and a number of grants that the Office of Early Childhood has provided to the Discovery Depot. So they are well-funded and able to take care of the needs that they have for their respective service and offerings. Also, I think their costs or their prices for their services have also gone up just a bit as well. So again, if you look further into the financial reports, you'll see the details and see that they're in good standing. The Cafeteria Fund
That is,
is
no,
for
that's very good news too, just as a side, given where we were 2 years ago.
why I spiked it out.
Yeah.
So, and also with all the stuff that's been going on with the pandemic, there's been a number of concerns about whether or not they were able to maintain, knowing that they had to create space for social distance, which means fewer kids were participating. But she's got her numbers back up.
Yeah.
The Cafeteria Fund is, again, at the Mansfield Board of Ed. They are looking as if they're running a shortfall. Unfortunately, they're on the free program, something called Seamless Summer Option, which the Department of Justice and the USDA had offered during the pandemic every single community in the country the opportunity for free meals, regardless of whether they were able to pay or not. And the Mansfield Board of Ed took advantage of that. They are still in Seamless Summer, which means they have to wait on the claims to be reimbursed by the U.S. Treasury. So that process is generally 45 to 60 days delayed. So I know that she's got claims for several $100,000s that have not been processed yet by the Treasury. So my expectation is that number will start to diminish. In any event, it's the burden of the Board of Ed to make it whole at the end of the school year. Should she fall short moving forward. Park and Rec. So expenditures did exceed the revenues by about $60,000. And the fund balance for July 1st, 2021, if you recall, the last year around this November and December, there was a projection of about $700,000 to $900,000, and so therefore the town manager and the Park and Rec interim director took action, and the head of HR to try and curtail some of that shortfall. By the end of the year, with all of the sort of like the tightening up that Ryan and HR and myself, that what we did with the rest of the general fund, we were able to parlay that $400,000 in savings to cover their shortfall, which gave them a fund balance of $4,376. So I say all that to give you context. So they started out the fiscal year with $4,000. Okay, so halfway through the fiscal year, their shortfall is at $55,000, which is a far cry from what it was last year and the year before. So again, the details are further on in the quarterly financials, but I just wanted to not so much give a plug, but just sort of balance out the perspective that yes, there's a shortfall of $55,000, but it's quite different compared to, I think it was $220,000 in previous years. Okay.
And Charmaine, correct me if I'm wrong, and I'm gonna try to pull this number from my head, so I'll definitely be wrong, but was it somewhere in the neighborhood of $150,000 that we budgeted year-end deficit that we anticipated for Parks and Rec this year? So when you look at, if that number is at all accurate, and I might be a little off, but if that number is at all accurate, we would have expected to be, quote unquote, in the hole a bit more at this point than we currently are. What was the number though? Was it 150,000? I can't quite remember.
Actually, I don't remember the exact
All right,
number for that.
there's a page for that. I'll look ahead while we're talking here. I'll find it.
Okay. So are there any other questions or concerns about Park and Rec?
No, I just want to clarify. So the $55,000 deficit, that the way I first thought of it, and tell me if this is correct, if that's, taking into account the money we already, the extra money that you described that we put into it, is this an unexpected deficit? in the sense that we thought we had completely covered it by those things, or not? Okay, go ahead.
So I don't want to say it's an unexpected deficit. Because the Park and Rec business cycle, it has its ebbs and its flows, okay?
Right.
So because it's operated as a business versus if it was operating like the rest of the municipality, then there would be inflows of cash on a quarterly or a monthly basis, depending on what it is, from the general fund. And then you wouldn't be, if it was beyond that, then that would be unexpected and that would be a concern. But at this point, they're operating with the same, if you recall, last year, when we budgeted for fiscal year 21-22, we did not budget for a finance director and an assistant, finance director. Oh my God, what am I saying about myself? The Park and Rec director and the assistant Park and Rec director. We budgeted for one position. And so, which is, the reappropriation, I think, Ryan, is maybe what you might be referring to, that brings us to the shortfall of $150,000. So they were already poised to pull back on some of the things, and cut down on expenditures to get them to be more streamlined, consistent with last year's edict that was given to them. So it kind of flowed through with the same positioning for this current fiscal year, because again, the budget development process was happening real time as they were trying to pull back during last year. So I don't know if I convoluted it any further for you, but the point of the matter is they are a lot less in the hole than what they had been in previous years. They also did not come into this fiscal year with $100,000+ fund balance as they had in the past.
Okay,
So Peter, I think page 14 has the numbers that I was trying to remember off the top of my head. So if you look at the bottom
and by page 4, you don't mean in the
of the
packet?
packet,
No, you mean,
or the financial statement, sorry,
okay.
page
okay.
14, yeah, whatever that corresponds to for, I don't know, for a pack, I'm looking at the hard copy, so. But that's where the Parks and
That's
Recreation.
page 42, I think.
Okay, yeah, so it's, but if you look at the bottom of the page, it's page 14 in the financial statements. And so, and actually I'd have to look to Charmaine to clarify this, because so on the left column, it's the budget for 21-22. And I think what this is saying is that when we budget for the year, we budgeted and projected a roughly $192,000 shortfall for Parks and Rec. The next column over shows the number we've been talking about, this $55,000 shortfall halfway through the year. So basically what we're saying is, while it's never good to have a shortfall, the shortfall is substantially less than we would have projected at this point.
Correct.
Okay.
Correct.
Yeah.
If you look at the deficiency for this time last year, it was $344,000. But because you went into the fiscal year with some funds in the fund balance, it looks like it was, having trouble with my mouse, $219,000 as of in arrears as of December 31st, 2020, excuse me.
So we're definitely not where we aspire to be, but we budgeted for this year thinking that it was going to be a recovery year. And it seems that, we're maybe slightly outperforming our not so rosy predictions.
Right, okay. Thank you.
Okay. Back to my notes here. Okay, so now the capital non-recurring fund. So just so we're all clear on what's happening with that, and it says $3.7 million grant from FEMA for fiscal year 2021. That's just a label. That's the ARPA money. Okay, it's a little over $3.7 million that we had to put somewhere, and made sure it was separate and easily traceable, and especially until we determined, or the town council had determined what it wanted to do with the ARPA funds. So that's where it is. It's sitting in CNR, which is an approved location for it to be sitting, but that's the reason why your CNR looks bloated, because your capital non-recurring should not be so far beyond what your projects are that are tagged to the capital non-recurring budget. But that's why it's there.
Okay.
Questions? Otherwise, that account is on pace. Okay, so the town aid road fund. So the revenues are exceeding the expenditures, which is a good thing. And so we're in good standing with the town aid road fund, and the grant is $414,000. Now, this is, the snow started really hitting us, and the removal started taking a toll on the account in January and in February. So we're in good standing. However, John has indicated that the cost of like the salt or whatever that material that they use, I don't know that it's salt, the material that they use on our roads, the costs have gone up. So the revenues have, meaning we've been saving money. We haven't been having to salt as much as we have in the last couple of weeks, but we have funds to support that, and it is not going to be just a bloated fund, I guess is what I'm trying to convey, that the money will be used in accordance with the escalating costs associated with that material that is used to clear the roads, or to sand and salt the roads.
We use a treated
the road.
salt, and it happens to
Thank
be
you.
St. Patty's Day green. I think it used to be brown. It's now green. But we are not adding Miracle Grow lawn product to the salt. That's just a different color from a different vendor.
And this also includes, is this any of this portion of, road resurfacing, repaving, or
Not this one, no.
this is pure snow
Not this
removal? Or-
Yeah,
and
we
road
fund
re-
our paving through CIP.
Right.
So again, the sort of enterprise or internal service funds are pretty much looking, good. The one I do want to draw your attention to, of course, is always the health insurance fund. And again, to remind everyone, this is not alarming that of the $170,000 of expenditures exceeding the revenues, we budgeted against the medical insurance fund to take and you'll see it broken out in the quarterly financials, we budgeted for a $900,000 reduction in that medical insurance fund in order to sort of reduce the overall cost share for the employer and the employee for the coming fiscal year. So this is not alarming. This is consistent with what our expectations are. Okay, but I will take this opportunity to tell you that for those who are privy to the fact that the Fed has declared that the insurance companies, and now self-insured clients have to fall into alignment as well, have to cover for free for the employees their COVID tests. Each member of the plan gets 8 tests a month for the entire plan year for every single member. We have over 1,000 members in our plan, and those tests run between $75 to $100 a pop. So the Lockton, which is our healthcare insurance consultant, worked through some analytics to determine kind of what the actual hit would be on the plan, and we are still well within our ability to cover those costs.
What is the estimate?
The estimate is around $100,000+ versus based off of the natural behavior of the 1,041 members that are in our plan.
Aren't the test costs capped? Or is that $100 a pop? They're capped at like,
Right. So again, locked into account the cost of the cap. When the original notice was given or made the news, no one knew what the cap cost would be. But ultimately, what ends up happening is whatever the cap is, if the cost is actually above that cap, it has to get paid in some capacity. And since we're self-insured, we would have to operate just like the insurance company would operate with when they did fully insured, meaning they would cover it and they would eat that cost this time around, but then they would charge the client or the plan sponsor for all the costs that they ate during the year that they were required to pay those fees. So with us, there is a cap, but again, it's free to the employee, but somehow it has to get paid.
well, it's only, are you talking about if this is for us providing the tests to employees? Because my personal experience with my regular non-self-insured plan is that none of the commercial plans have actually set up a method by which you can procure tests directly from them, even though they're required to. They are just putting forward an incredibly cumbersome and complicated reimbursement methodology to get yourself reimbursed. So I know is that what you're talking about? And follow up, would we need to do anything? We have like a plan, like we're self-insured, but we use an administrator for our insurance. Wouldn't we just use so this is just whatever they're going to charge us basically for whatever our members do through whatever program they've set up? I don't know which one it is off the top of my head.
So for the first part of the question that you asked, it's both the reimbursed pieces, like you get the home test and you get reimbursed for that, and for when you go to get your PCR at a provider. So it's for both parts. And then again, because we are administrative services only, as you just pointed to, because we're self-insured, they would administer just like they administer the plan for any other health claim. And so, right, ultimately, it'll make its way back to us, either as administrative services fee or the cost associated with the actual service being provided.
What kind of a financial impact is that?
So what they calculated was in the neighborhood of about $100,000 against this medical insurance fund that has over $5 million in it.
So I mean, a 23% claim increase, which, I mean, we still have a very large surplus, but if the brokers told us any particular reason for that?
The claim increase?
Yeah. Yes.
Oh, well, the escalating cost of healthcare and then the opening up of medical providers being able to do everything. Before it was only essential, they were covering COVID patients or people who needed, urgent surgeries or things like that. But now you can go and get everything. So folks were going to get their services.
Oh, you mean delayed healthcare needs.
Right. So people are more comfortable about going to get their services. Even after it was opened up last year, people still weren't really comfortable going into healthcare providers, especially if it's a hospital. They weren't really comfortable doing that. So now people feel a little bit more comfortable doing it, and they're going. So the escalating costs, and then people getting more services.
Charmaine, how does this year's cost compare with the year prior to COVID?
I'd have to, we can look at the, within the quarterly financials, and it should show the healthcare, the medical insurance year-over-year claims. And so it's kind of, I think we need to level out first before we do a real comparison year over year, because of all, like I said, the backup of people not getting the services that they should have gotten. And then there was some talk about those people who did not go, even though they probably should have gone to get their services, their circumstances have now escalated. And so it's more costly to deal with their health issues at this point than it would have been had they gone in at the time that they were allowed to. Trying to find, oops, that's capital. Did I go past it?
I know that's the general explanation. I'm wondering if you've looked at the actual usage of Mansfield folks to see if this holds true for our crews.
So, I mean, nothing more than the quarter over quarter or month over month, from the prior year. Nothing more than that, just to see if we are keeping pace with the fund.
I think to figure out what our usage is really going to be, you're just going to have to drop the COVID years and go back to something more normal.
Right, that's what the brokers will do.
I was just going to say, we take kind of our guidance from them because it is a tricky landscape to try and navigate. We do the calculations, so we get the cost associated with the plan based off of the census that's in the plan, and then we calculate based off of who the respective employers and employee groups. So to project beyond that, we're not doing. And even with the broker, they are very, locked in is very straight about what they feel confident and know, and they're also very honest about what they don't know. So if you were to look at, I'm not sure what it looks like, what page it is in your pack, your council packet, but it's page 28 in your financial statements, the Blue Cross monthly claims fiscal year basis, and it goes back to 2012, 2013. So you can see we're looking at about 300,000. So in July of 2012-13, fiscal year 12-13, our monthly costs were 471,000 compared to this year, 732,000. So that's $300,000 just for July.
Monthly.
Monthly, correct. So it breaks it down. I mean, it's I don't want to say it's all over the place, but when we meet with Lockton and they speak to kind of what the trends are and what they're seeing across multiple plans, we get a sense for kind of what's happening. But again, that's what happened. That's not what necessarily will happen.
Okay. So I mean, on page 26 of the financials, this is the health insurance fund. I'm not sure I understand the liabilities, 379,000, but they are identical from the previous year, which seems almost impossible, probability wise.
So this is the excuse me. Well, not necessarily, because if we put anchors in our this is the budget. So this is the health insurance fund, the balance sheet. This is what we're budgeted for, and this is in what year over year for 2021. So the $379,000 accrued medical claims, that's generally what is accrued, just like the deferred revenue. Those are things that are kind of anchored in the activity. And so it's not necessarily startling, I guess is the best way to put it. And again, the balance sheet is just the assets and the liabilities, they're bundled. Whereas when you look at the comparative statement of revenues and expenditures, it breaks out the detail.
Okay, thank you.
Something in the chat box.
Oh,
that's okay. So any other questions on the health insurance?
no, it's good. No.
I mean, it's a big number, and I know there's a lot of interest. So other than that, all the other, like I said, the internal service funds are pretty much looking on par to do what they're supposed to be doing. And we don't have any known issues there. The medical insurance fund is the one that is most high popping.
So I mean,
Okay.
Oh, go ahead.
No. And the only other thing was, when we go to head down to the Mansfield Downtown Partnership, unless you're interested in Eastern Highlands Health District, their revenues exceed expenditures by $152,000. They've received additional grants. Like, they do their budget based off of what they know in November and December of the prior year. And then they get allocated grant monies from the state based off of census. And their census is based off of multiple towns. It's not just Mansfield. So they received, I think Rob tends to budget the bare minimum based off of prior year. And then they end up getting whatever the state deems is, appropriate. Plus, he asks for as much money as he can get at every opportunity. So,
Right. So I
the
mean,
downtown part.
I was
sorry, go ahead.
going to ask on the cemetery fund. Is that, that seems to lose money, or the debt with the surplus seems to be going down every year. Is that accurate? Or, is there a plan on, on how that will be reversed?
Well, so the fund is actually being used to take care of not just the reduction in in interest. It's actually being used. It's funding okay. So, and we're maintaining the required minimum balance of $250,000. So we do need to revisit kind of its investment strategy, but we'll probably need to do that with the entire portfolio for the town as well.
Okay. Now, the required 250, is that state requirement, or what's that requirement?
Now, I believe that's part of when the fund was originally established. That's what the main fund balance was, target.
Okay, thank you.
I don't know if anybody knows offhand when the fees have been sort of last examined. I know that it's not uncommon for towns to let a lot of years slide in between adjustments. And so I don't know if you want to call it market rate, but whatever you want to call it, we may be well off market rate if we haven't done an analysis of those fees in a while.
It's easy to bury that issue.
I see what you did there.
Okay. I don't know if Ben got it. He's like,
I think he just thinks it's too stupid.
I didn't think it was worth a smile.
Yeah.
okay.
Oh,
A long tradition of making fun of the cemetery fund.
yeah, it's not even that. Yeah, I could have done better. But
Okay. And then there's the Mansfield Downtown Partnership. Again, they're in good standing. They've received all of UConn's contributions to date. So, are there any other questions about the quarterlies?
and anything?
Not for me.
And so, you everything you want to do, refer to, you've mentioned everything you wanted to highlight.
Right. It's again, I'm grateful that with all the other stuff that's going on with all the federal and state reporting and, staffing shifts and changes as a result of either people moving on or having health issues. This is good. This is something that I don't have to stress over because we're moving along accordingly and there are no surprises.
Okay, right. All right. Any other communications, other business and or future agenda items?
No, we need to recommend the
The
financials to the
quarterly.
council though, Peter.
Oh.
So I'll move to recommend the council adopt the quarterly financial statements.
Thank you for reminding me, and I second. Al's not here. So we recommend they be moved to the council for an approval.
Okay.
And if there is no of the other things, then I'll move to adjourn.
And I second.
Cool. We'll see you
Thank you.
in 7 minutes.
Right, and we have, wow, we gained 7 minutes. That's good. All right, thank you. We'll see everyone in 7 minutes. Thank you very much.
Thank you.
Thank
Bye.
you.
Bye.